how to figure out a trap-like reversal in the market. Let's take a look at the cycle edge report, because that's what's going to give us the daily map. Now, earlier on today, in fact, maybe an hour ago or something, I talked about how to get into a market with a time-space motion indicator when it crosses your time setup, right? So I got price, I got time, and I got a trade setup, which is your trade setup. Whatever setup you want to use in your technical analysis is good if you want to match to time and price. One other additional thing was important, and I wanted to do an additional video on it because in the cycle report, cycle edge report, okay, for gold, this is Friday, 24th. What do we have? We have the alert windows for today. In this section, we have sustained pressure. So the market is under pressure. I've got a trap-like reversal coming in at 850, corresponding to some of our timing at 640 here. All right, 640 to 645. And the trap-like reversal is coming in slightly after, about 2 hours. Why is that important? Because if the market is at a TSM price at the right time, and I'm expecting a trap-like reversal, they're going to screw people over. And the way to do that at 850, which is right on this bar, this is a 15-minute chart. 845 is that bar. That's your 9 o'clock bar. They just sold off, and anybody who entered this breakout trade coming into 850 got trapped. And this is the reversal. Between 850 to 120, this will continue. In the previous video, where I entered the gold trade, knowing that this is going to happen and it's lasting until 120, and then I've got 120, and we've got trade hours coming in at 12:20 to 1, is already giving me the idea that the market has got room to push. If you were just doing technical analysis, the first place you'd be selling at is the previous day low, because you'd say, wow, we broke the previous day low, we've been mucking around here, so but I don't have any timing information, right? If I don't do timing, I won't know. Then people will sell here, and you can see somebody did, only to get disappointed. The second place people would have sold, this is a 5-minute chart at the moment, sorry, okay, this is a 5-minute chart. If it was 15 minutes, well, if it was 15 minutes, that's still your 9, okay? Then the second group of people would say, well, this is where they sold off. Maybe we'll do a stop sweep because everybody's stop is above that zone, okay? Which is exactly what's happening here. Like they blasted it up, but they haven't sweeped it in this 5 minutes. They've broken out clean, okay? And this is a 5-minute chart with the TSM down here. So if I want to get into the trade, I'd be looking at price levels here, okay, which are all reflected into there. So what am I trying to say? If you know the hours in front ahead of you, and if you have the window of opportunity according to your time and price coming together, they connect, then it's a bingo trade. Very small probability of it being a losing trade. Once the market makes its move, if you covered the trade like I did, I covered the trade, so we're all good. We've literally entered at the bottom of the market, as you can see here, right at the bottom. And people always say, you know, don't try to pick tops and bottoms. If you can calculate it, why not? If you can't calculate it, obviously don't, right? Now let's take a look. This thing still has room. If we're going to be pushing up, we're in a sideways market. If this thing goes, it's going to go probably all the way back up here. How would I know that? Well, I've got the trade days for next week already known to me in advance. And the funny thing about next week is Monday is also a critical day. So I'm thinking to myself, if the market goes up today, Monday could be a retest day, stop sweep day, and a buy again from the low day, right? Low of the day, which is fine. Knowing that in advance also helps, so I don't get emotionally greedy. Greed is good if it's mathematical. You understand where you're going. So I've got a target of 125 there. Why? Because it's the daily opposite of 125 trend line here. You can see I've got 128 for a target. Obviously I put it at 125 because we don't want to get too greedy, because it's always, you know, it can be a few dollars off, right? But a few dollars in this game is not a lot, right? If you're trading gold anyway, right? So you're already in the market. As you can see, that's why the market, you know, went a few dollars below where I entered, right? And I had 4,125 this morning. So after the volatility, now it gave me an adjustment. If the market should go back today to retest, I should look at entering at 4,028, which is going to be around here somewhere. Okay, so if I was to re-enter the trade, okay, and that's it. So now that you can cover your trade, you're all good, and the rest of the trade can be just left alone. I covered the trade at 1 to 2.5. Why? Because after I saw the big impulse wave, I said this is going to break and we've got hours ahead of us. So I've moved it below the today's opening, yesterday's closing, because if anybody's going to stop sweep, it's going to be in this zone above all these levels here. You see the levels? Okay. So it was just logical to get out and then let the second trade go. Now you got 1 to 2.5 risk return trade closed under your belt. The second one is good to follow. Okay, and obviously I will check during the day to see where we're at according to the hours of the day. So until all the way the next hours, until 12:30 or 12 to 1:30, let's say you want to be a little bit earlier, 12 to 1:30, I don't have anything to really look at, and I'm all good with the trade. So greed is good if it's mathematical, not emotional. Secondly, if you got the range of what the move is going to be, then you got a good idea of what the market is doing. Another thing with this report, which is really good to know, is if it tells you, listen, there's a trap like a reversal, obviously that zone is going to be tricky and dangerous. You might want to wait it out. Not a bad idea at all. If you took timing from me as well and you check your timing, let's see where we're at, okay, on there. If you check your timing, today is the 24th. So if I come into the 24th, you will see that a sudden movement is going to be disruptive for the market, and that's going to be around, guess what, around the same hours as that 120. Let me just double check. Yeah, 140. In fact, 145. Oops. All right, so that is the way to go. So bringing those hours together what you're essentially doing is mapping out the whole day in advance. And if you have any traps anywhere, if you have sustained pressure from 4:55 to 6:30, this is when New York will probably bring the price down. If they want to buy again, they'll bring the price down. When? Between 4:55 and 6:30 my time. Remember, these are UTC plus 3 hours because I'm in Turkey time zone, right? That's the Istanbul time zone, okay? But that's the exchange time and so on. All right, so I hope these little videos help you to kind of like use the report with your trade setup at the right time. So time and price come together, you've got a bingo trade.